All right, guys, what's going on? Welcome to Sunday Night Charts with Jim of All Trades. Good to see you. Welcome to the channel. My name's Jim. I'm a crypto trader and a Forex trader here to help you understand the market from an Elliott wave perspective. All right, let me see if I can get some settings done here quick and say hi to everybody. Said hi to me. What's up, Eddie Bo? Good to see you, man. Hope you're well. Keith M., you running tonight? Hope you're doing all right as well. What's up, Jordan? Levy, how you doing, man? Glad to have you here. Hope you're doing well. Make an announcement in the Discord. Let everybody know I'm live. And here we go. All right, guys. Well, we got a roller coaster ride of price action coming for Bitcoin. I'm going to show you what I'm seeing. I've got three main counts of this wave structure that we're looking at. Okay. We're going to look at the wave structure, see what we can see, and then we're going to predict where price might be heading and how it might be going, where it's going. But don't confuse that for financial advice. I'm not a financial advisor. I'm a wave structure analyst, guys. What I do is I analyze the wave shapes and the wave structures using a theory called Elliott wave theory. If you're unfamiliar with it, I suggest you do a little research. I've got a great channel that teaches it. I got a playlist. You can learn Elliott wave trading. It's called Trading Night School playlist. It's pretty old. I did it a bunch of years ago, but it'll at least give you the basics of Elliott wave right here, free of charge. You want a more up-to-date video lesson, I'd love to show that to you in my Discord. That's you can come on in. You get access to all those my Jim's trading course, which includes Elliott wave training as well in the Discord. So come on in. I'd love to have you. Links in the description. So with that said, guys, glad you made it to the start. Jordan, awesome. All right, well, we're going to look at the charts here, guys. We're going to look at Bitcoin. We're going to look at XRP. We'll look at Ethereum and see where price might be heading, guys. I see a roller coaster ride coming. And I got a couple of accounts I want to share with you. They're pretty interesting, so stick with me through the whole analysis, and you'll be happy that you did. You won't find any better analysis on the internet that takes a holistic perspective, not just wave structure, but we look at the wave structure in light of geopolitical landscape as well as the economic landscape and the entirety of the markets. We put it all together and see if we can come up with a rational and reasonable expectation for price. We're not moon boys, we're not bear boys, we're just as rational and reasonable as we can possibly be. So with that said, hope you guys are doing well. Let's jump into the analysis here. We're going to start off on the weekly time frame, looking at the Bitcoin price chart very quickly, guys. As an Elliott wave trader, when I look at this chart, I start off with this every week, but I've just got to start with the macro move in. I see 5 waves, and look for 5 waves in each of those waves. Okay, from the start of time. This is a wave 1, 2, 3, 4, and 5. We've got 5 waves. 3 pushes is as often when you look at from a market maker standpoint. Boom, boom, and boom. 3 pushes. Usually after that, you're going to get an in-depth pullback. Okay, so you're going to get a 3-wave pullback. More than likely, that's going to take quite a while. I've been calling it a multi-year bear market. That's what I think I think that has begun here. We're in the beginning stages of a multi-year bear market. That's at least a viable prospect and something you should consider to be a well-balanced trader. You have to at least consider the fact that we do have a shape of 5 waves. We've got the divergences we expect to see on the RSI, on the weekly chart as well as the monthly chart. When you look on the weekly, that's looking at the local wave. You'll notice that we have a high here, an overbought condition. On a wave 3, we have a lower high in the RSI while we have a higher high in price. That's usually because you hit a wave 3 followed by a wave 5 with a wave 4 in the middle of it, right? And basically price action has said, hey, listen, we're coming back down. That's divergence, okay? And that's playing out. And when you look at that on the monthly time frame, you'll see that same divergence before the large time frame. Wave 3, you'll see it right here. Boom. There's the top of wave 3 in an overbought condition. Wave 5 here with it basically came up, made a lower high in price, lower high in the RSI, higher high in price, and that provides divergence as well. Then you see the local divergence between the local wave 3 and 5, and 3 and 5, which I just showed you on the weekly chart. Finally, you look at that and you say, hey, we have a break of the RSI structure as well. We've broken the pattern of upward movement in the RSI has been broken, and we've begun a downward trend. That doesn't mean we can't pull back here in the RSI and even retag the high, maybe, or get close. It just means that, we've got breaks of structure. Last time we did that, if you want to notice, okay, there it was. We broke structure and came rocking down. You can see the first time we broke structure as well. Boom. We broke structure and came rocking down. So, I mean, you've got all the signs on the chart that says, hey, guys, this is a possible reversal. You need to consider. I know a lot of people are just telling me, you're crazy. That's never going to happen. That, we've got to go to 200,000. We've got to go to 150K. We're going up, up, up. We're never going to stop. I know that's the sentiment out there. And I just can't. I can say, okay, yeah, that's possible. But as from a wave structure analyst, it looks like we've finished. Okay, so that's the macro. Now, what's the bullish hope? The bullish hope is that what we've experienced here on the weekly chart is that this is some kind of wave, larger degree wave 4. This was a wave 4 of wave 3. So this was wave 4, yes, but it's a wave 4 of a third wave. That means we've got this fifth wave here that I just highlighted isn't the fifth wave of the entire degree. Rather, this is the fifth wave of the third, and that this is a wave 4. And now we're in the process of making our blow off top here, our fifth of the higher degree, right there. Now, do I think that's the count? No, I don't think that's the count. But could it be? Yeah, absolutely, it could be. But is it the count? I'm not here to say what it is or isn't. What do I think? No, I don't think that's it. But doesn't mean I'm right. I could be wrong, and so I'm never shy about giving my opinion. But I just want to let you know I could be wrong, right? And I have been wrong. But if you've been here a while, and I've been right more times than I've been wrong. But it doesn't matter. It doesn't matter what my record is. What we try to do is give balanced analysis, and we get prepared for all scenarios, bearish and bullish. So it really doesn't matter about being right. So that's the bullish hope there. So we've already gone over two counts, two basic counts here on the macro, that we have a finished 5 waves looking for looking for a macro pullback. That's 3 waves to retest. I would say to retest what I call real support. Now, what is real support on this chart? Okay, there's 2 levels of real price support. When we talk about real price support, we're not just talking about, for instance, you might say, hey, here we have some price support right here. Yes. You might even say, hey, we've got price support at the top of this wave. You can see how we came down to the top of this wave and we bounced off of that. You say that's support. Yes, that's support, but that's not what I call and teach as real support. When you talk about real support in waves, we're talking about the troughs, not the peaks, but the troughs of a wave. Okay. In other words, this is a peak, and those peaks can provide some prickly, reactions off of those. However, the trough is where price was coming down hard and found support previously. Not where it found a previous high, but rather a previous low. So in other words, this is a tested low. So and the more times that particular level has tested that low and held that low, or revisited that low and it's held, then the better that support is, right? So when you look at this first trough, okay, let me make sure I'm clear about what a trough is. So when waves go up, they create peaks, and then they come down, find support, go back up. They create a trough here. This bottom, that little V shape right there, that's the trough we're talking about. It goes up, makes another high, comes down. If it finds support, it's going to make another trough, right, and go up again. So these lows here, these pullbacks to the lows are the troughs, and that is where you're going to find the real strong price support on charts. That's what you want to look for. Those are the areas. Okay, so right here, this is your first area of support. We're really looking at the $56,000 range. Okay, we're really looking at that level and saying that is an area of real support. Notice that it is congruent with the peaks of this previous high, the $50,000 to $70,000 range. When you talk about that range, That is the first area of real support. We have not hit that. We have not come back. We've not back tested that. We've not come back to that. There's a high likelihood, very strong likelihood, that those levels are going to be revisited. When and how is another story. Okay, but that is the first level. That is level one of real support. You say, where's the next level? Well, you just go down to the next trough. The next trough you're going to find, okay, is right here. This one right there, which is congruent with the peak of this little move right there. So that level sitting at around $30,000, $30 to $40,000 range, is the next area of support. Okay, that's the next real area of price support. Okay, now which one's stronger? Well, I think an argument can be made for both. They're probably both equally as strong on this particular chart. We revisited this. This was resistance. It became boom. It went through it, came back, found support, and continued on. Okay, and that level has still held up to this point, right? But it doesn't mean it can't be broken. Now, the final area of real support that I see on this chart, it's not the final area, but it's another major area, is the next major trough, which is right there. That's a really major area. Okay, why? Because when you look at it, you also have the top of this wave and the top of this wave. If you say between $15,000 and $20,000, if you even say between $13,000 and $20,000, that is a real strong area of support, because this trough is congruent with the peaks of these last two moves here. That's an area of really strong support. So I think $15,000 to $20,000 is an area that is should, I would imagine, hold. Now, it doesn't have to, because I think the strongest area of price support, the very strongest area of price support for Bitcoin, is down here at $3,000 to $6,000. Now, are we going to revisit that low, go all the way back down there? You know what? I have a hard time saying that. I have a hard time believing that, to be honest with you. It all depends. It all depends on the longevity of Bitcoin as an asset in general. Okay, in other words, if you assume that Bitcoin has to, with certainty, withstand the test of time and be around here forever, that digital assets are going to be rooted and grounded in Bitcoin itself, if you assume that and assert that, then it's really, really hard to imagine price going down that low for Bitcoin. Okay, that would be super dangerous price area for Bitcoin to revisit. However, if you understand the possibility that the current digital asset class that we currently have is stage one of the digital renaissance that we are in, that we're going to be moving on to bigger and better things, and the stage one of crypto as we know it will probably, all of it as we know it, die off. If that is in the realm of your possibility, and it is possible that happens, that the digital asset class 2.0 comes out, okay, and of course that's going to be an evolution of time, but that's going to allow for the death of probably a ton of alts, okay, that already look like they're about on dead, right? They already look like they're on their deathbed. Some of these alts out there. I think there needs to be a culling of the crypto market, so that the assets and the digital products out there that have real viability and real use case scenario can rise to the top. Certainly Bitcoin is the top of that class, right? Bitcoin, Ethereum, ADA, XRP potentially, for sure. I mean, that there's no doubt that has. I'm just a little skeptical about XRP for some reasons that I just something's off in my mind. I think the hype around XRP quite strong. I don't know. I'm just a little nervous about XRP, to be honest with you. But that doesn't mean I'm right about that. It might be a long term asset class that's used by banks, right? But the point is that if you're of the mindset that Bitcoin has to be here, I think you're making a dangerous assumption. I really do. Now, I'm not here to say crypto, to offer FUD and that Bitcoin's going to die. I'm just saying that I think crypto as we know it 30 years from now is going to be quite different. The landscape's going to be a lot different, okay? And a lot of these coins and a lot of these assets are going to be dead, okay? Because what's going to happen is we're going to have time for the market, for our current economic situation to die, and then the new economic reality is going to rise out of the ashes of that. And who knows what the powers that be that are running the world, what their plan is. This current digital landscape that we're surveying here is probably is just the beginning of that kind of thing, right? It's just the beginnings of moving us in that direction. It's in my opinion, Bitcoin, in my opinion, is just we don't even know who created it. It's Satoshi Nakamoto, right? And whoever that is. But basically, they had to create something out of thin air, a digital asset which actually has no intrinsic value, and then they had to give it value, right? So that you see value in it, that I see value in it, and we say, oh, this is valuable. Which really, if you think about it, it has no intrinsic value whatsoever, other than what we see the potential for. We say, oh yeah, Bitcoin's going to $200,000. Well, why is it going to $200,000? Because you believe it needs to? Because there's enough market cap to drive it that high? I don't know. But remember, just the current dollar as we see it is sitting as a house of cards ready to fall. The U.S. dollar and every fiat currency in the world, not just the dollar, but every other currency of the world is a house of cards ready to crash. As soon as the belief system that is holding that house of cards up dies, as soon as the dollar is no longer a viable and sustainable form of currency, the value and the usefulness of the dollar is going to crash. That means the system as we know it is going to fail. And I personally believe that we are on the precipice of that failure. We're very close to it. Okay, we're nearing the 100-year anniversary of the Great Depression, and I think we're going to have the Great Depression 2.0 coming, and we're going to go to a digital system. You can tell they're moving us to a digital system. Now, how that digital system is going to look and what it's going to be remains to be seen. I find it hard to believe that the governments of the world are going to allow the people of the world to be free in their exchange of monetary assets, exchange of money without their hands controlling it. Bitcoin has been sold to us as a decentralized currency. It's been sold to us as, hey, yeah, we get freedom from the government. We can finally do our thing, but it basically we go to that digital society, under the promise of freedom, and we end up getting enslaved to the system digitally. So that's kind of some underpinning beliefs that I have. And when I look at the chart, I see that I strongly see the potential for this chart to crash. Okay, I can very much. Just looking at wave structures and patterns, see the potential for this thing to come on down like so. Okay, no problem. Find some support here, come back up, and then come on down again. And this would become a multi-year bear market. Okay, retesting real support areas. Boom. Now, if it's going to last, if it's going to hold, if Bitcoin's here to stay, it's going to find support somewhere between $20,000 and $30,000 to $40,000, in my opinion. And it's going to form a base and then begin working its way back up. It's going to take a while, but somewhere by in the middle of the next decade, in the 2030s, we should see Bitcoin soaring. And that's when the moon time comes, in my opinion. So I think we have a time of difficulty ahead of us. I believe that. The chart that you're now looking at is my number one idea. As I look at the chart, that's what I believe is probably happening or something, some version of what I've drawn there is happening on the Bitcoin chart in the macro. That doesn't mean it has to happen. It's the way I see the market. Looking at the geopolitical landscape, I see we're on the precipice of an economic collapse. I see all the markets tanking. Yes, we're getting a pullback now, but I see the markets tanking, the dollar tanking. So I got the markets and the dollar tanking at the same time, while gold is skyrocketing. And you say, okay, evidently money is flowing out of markets and out of the dollar into gold. It's not flowing into Bitcoin. Bitcoin's not popping. It's flowing into gold at the moment. Could it start pumping into Bitcoin? Absolutely. Could Bitcoin start pumping? Yes, it could. We're going to talk about some other scenarios here. I'm just talking off the cuff here, what I'm thinking geopolitically and from a wave structure standpoint. So that's kind of what I think here. I see this as 5 waves, 1, 2, 3, 4, 5. It's done. I think we're in the middle of a 3-wave pullback where this is A or W. We're in the B wave at the moment, looking for either a C wave or an X wave. A Y wave. So it just depends on whether we call it a WXY or an ABC. And all that is, if those of you are not very familiar with Elliott wave, the difference between an ABC and a WXY is the wave count, the sub count of the waves that create the 3. It's just a 3-wave pullback, okay, on the macro. It's just 3 waves, right? But the sub wave count of each wave is different in an ABC than it is in a WXY. In an ABC, you've got basically a 5-3-5, or you have a 3-3-5, depending on the format of that ABC. In a WXY, it's a complex correction. It's a double correction. And so basically it's a 3-3-3, where you have 3, 3, and then 3. Okay. So that would be a WXY. Now, if the second 3 comes up high enough to revisit the highs of this, we're going to call that a 3-3-5. We'd be looking for 5 waves down, and that would be labeled ABC as a flat. So when you hear me talking about ABC or WXY, that's what I'm getting at. It's what is the subwave count of those waves coming down. Okay, so with that said, what do I think we're in? What's happening right here? Well, in light of the macro analysis, I think we're in some kind of a WXY or ABC. So what is this wave? And is it finished? Are we ready to go down? My answer to that is no, probably not ready to go down yet. But we're possibly close. Could be this week. Could start. I've got 2 really, really nasty count. Well, I've got 1 really nasty count. Okay, and we might be heading down for sure in the next couple of weeks. Or I have another variation of that nasty count that's a little less nasty. So let's talk about those, and then we'll talk about some bullish ideas as well. So an area, a target zone that I'd be watching for this wave for one of my counts is right up here. Okay, you'll notice this area of liquidity, this liquidity zone right here. Right there. So you'll notice that we've come into that liquidity zone, but we've not taken it out. Okay. In other words, we've not hit the liquidity above it. You say, why is that important? Well, from a market making standpoint, okay, when you have market makers are the ones who move the market pretty much. They're the ones providing the trades for the retail trader. And they have to move the market and, where the money is, right? And so when you have liquidity, what we call liquidity zones right here, traders, there are traders that went short here, okay? And they may have taken profit already, or there may be traders with long-term shorts looking for more down. They haven't reached target. They're just waiting for that. But their stops are up here at this high. They may have stops here. Some of them may have stops here. Those stops are quite high. But if you took the short here on that breakout there, it got retested here, but it hasn't been taken out. So it seems likely that this area above here, there's going to be a lot of stop losses there, and there's going to be a lot of traders wanting to go long there as we break structure, as we take this level out. That's going to signal to a lot of breakout traders, for instance, go up here. Any kind of retest of that, they're looking for more up, right? So it comes up here, retests, boom, they're looking for long. So there's going to be long orders up in this range, especially if this level gets broken. Okay. Those longs will also be fueled by the stops of shorts. How do you stop out a short? Well, you buy. So there are buy orders up here. This is what we call liquidity, and this is a liquidity zone. So it seems reasonable to me that an area where this wave needs to go is up here to this liquidity zone around $100 to $102,000. When I pull the fibs to look for a Fibonacci target of that zone, I can pull it two ways. I can pull it, the first way is I can pull the retrace fibs, okay? And the retrace fibs are telling me that the 786 retrace is right up here in that zone. The 786 is right up here. So the 786 retrace is a perfect zone to look at. It's a Fibonacci, it's a round Fibonacci right up there. Okay. Secondly, if I pull the extension fibs on this wave, boom, 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 you'll notice that. Let's see, did I pull it the right way? Let me pull it a different way here. Sorry. There we go. If we pull it this way, where we say, hey, we've got a flat working, A, this is B, this is C, you'll notice that the C wave here, the 1618, is correlated at 102 with the 786. They're right on top of each other. So I've got a 1618 extension of this as a C wave, okay? Plus I have the 786 retrace up here. Plus I have this liquidity zone. And you put all that together, and 102 is a very important target zone for me for liquidity on this chart. So I would be looking for I'd be looking for 102 as a key location. Now, that doesn't mean it has to go there right now. I'm just saying that seems reasonable to me. Now, that's one count that we're probably going to find some support here. And this is some kind of a flat maybe. And then they come up for one more wave to hit target zone. Okay. And that would be an A, B, and a C wave. Okay. And that's a possibility for sure. But with the way the wave is looking right now and the way it's looking kind of reversal-ish, it's possible that we don't hit this target quite yet, because there's another very, very strong area of liquidity, very strong, that we really haven't tapped into. And that's right in this zone right here. But rather than right below this, I want to bring this down just a little bit to about 68,000, right in this zone. We're at the bottom of this first trough right here at about $67,000, $68,000. Now it doesn't have to come that deep, but that's a key area for me, okay, to pay attention to. And I see the possibility here. I see the possibility of this. Instead of what I've just drawn as an ABC, I'm going to draw it this way, where this ABC right there is finished, and that's a B wave, okay, of a larger, nasty A. This is a B, and C, where we come down to the target zone of about $68,000 to $70,000 is my range, okay. We come down kind of fast and furious over the next week or two. Okay, and we come in and we hit these levels. You see, we did not hit this level yet. I was expecting this to come on down and finish down here at $68,000 to $70,000. It didn't. It shot up. It truncated this wave. Okay. You say, what are you talking about, Jim? Well, when we look at, let me zoom in just a little bit to the 8 hour. When you look at this wave here is 3 right there. You're looking for the second 3 to kind of come down to the 1-to-1 extension. It barely made the 786 extension. And it really doesn't look like a very congruent or very nice wave. It just didn't hit target zone. And it seems like it just reversed out of nowhere. And it just didn't hit anywhere you'd expect it to hit. And the market often, I say this all the time, the market often goes where you expect it to go, just not how you expect it. And it was maybe too obvious that price was going to come down to this zone here between 68 and 70K and then pop up, which is what I was looking for. Okay. However, that didn't happen. It front ran the target and popped up. Well, you say, okay, Jim, fine. We're getting ready to go up to your target. Well, what if they do it again to us, where they front run the target? In other words, they come up to this area, but they don't take it out, and they reverse off it again, coming down, finally hitting the target that you were expecting them to hit, only to reverse right on back up to hit the target. And that's the roller coaster that I wanted to mention in my title of tonight's live stream. Okay, and this is the idea here. Okay, where we actually come down to the target zone. Okay, and it's an ABC, and this structure right here is nothing but a flat. It's nothing but a flat, but it's a B wave. We got the A wave right here, 3 waves down, 3 waves up, and this is an expanded flat where it comes down and takes the low. Boom. Finally hits target. If we zoom in just a little bit and we pull the fibs on that sucker, let me see if I can get rid of my drawings there. There we go. Zoom in just a little bit. Let's pull the fibs on that guy and see where it might come. Here's A, up to B, boom, right there. Notice the 1618 is sitting right down here at $68,000, which has been my target zone for quite a while now. Okay, so that's a nasty count. That is nasty. Nasty, nasty. Okay. And I see this possibly happening with relative speed next week to 2 weeks. It could come down in the next week, but it could take longer. It just depends on what kind of wave and how it comes down. But it all depends on how much playing around there is up here. But we have what looks to be a reversal off the top here. But we need a bit of a pullback, and and that pullback could take a week of price action, to be honest with you, in order to play out. So we may not get the dump this week. However, we do have the Fed news coming out this week. The rate announcements coming out this week. So we're going to have Jerome Powell in the house, as Crypto Teacher likes to say, Jerome in the house, bringing the rates to us. And so there's going to be volatility this week for sure. So I think there's a real possibility we might get a dump on the heels of the rate announcement. So probably not this week is the dump. It's probably going to be setting up for at least the latter part of this week or the beginning of next week, dump over the weekend even. Next weekend, we could have a real volatile weekend next weekend or into the beginning of next week. Okay, so that's a real wave structure idea that I'm strongly considering. What do you guys think about it? You guys are quiet in the chat. What are y'all thinking about it? That's a nasty count. It really is. But what it does is it hits targets just in a way that makes it challenging. So come down, hit targets, boom, then we pop up to hit targets there. All right, so that's kind of my main idea to present to you. Now we can talk about some different contingencies to plan for. What if we don't get that at all and we get something a lot simpler? Okay. What if we get something simpler? What if this is A, B, and that's C, and it's finished, or it needs to go up a little higher to hit target? It doesn't have to hit target. It could have already reached target. It's already hit the 1618 extension. So it's possible. It's already hit the golden zone retrace. So it's possible it's already hit the target and it's done. And we don't have to do what I just said, but rather this is ABC. This is ABC. And now we're getting ready to go down for ABC. Okay. And that's another possibility. We're getting ready to head down. And it's going to be a strong move. Okay. And that strong move is going to probably find its support down here at the first area of real support. Okay. And that's another bearish simple count. Okay. Again, the bullish hope is that this is the end. Oh, sorry. this right here was the end of some kind of correction. This was the first wave. We get some kind of 3-wave pullback. It's not going to be too big, but we get some kind of pullback, and then it could be even smaller than that. Boom, and then we go. We start pumping after that. And that's the bullish hope right there. And it begins some kind of extended 5th wave of Bitcoin. So there it is. I presented in pretty quick fashion, guys, my main counts. So how are we doing this? Let me take a little voice break here, drink some liquid, and let you guys chat and tell me what you think. 33 of you watching. Hit those likes if you don't mind. Let YouTube know you like the channel and you like what you're watching. Appreciate that if you would. That would make my night as well. Those kinds of things, likes and subscribes and things of that nature, really does benefit those of us who do YouTube, because YouTube pays attention to those things, and it's just a way you can let YouTube know you do like this and you do like the content, and really, I know it clutters up your subscription list, but I don't put out a ton of content. Just do a Sunday Night Live anymore. I used to do a video every day. So anyway, let me take a break from my voice just for a second and let you guys chat if you want to. Appreciate that, Eddie Bo. Thank you, sir. All right. With that said, guys, with the analysis of Bitcoin is done, my main wave count ideas are presented. Now I'm looking at XRP next, and then we'll look at Ethereum as well. Okay, XRP. What in the world is XRP doing? Well, I think it is. I mean, what a nasty, slow-moving wave that was. See, it goes up real fast and slow over the weekend to the downside. Finally picking up some steam. I've been short for quite a while, but finally picking up some steam. Is this going to find some support for a wave to the upside now? I don't know. Zooming out to the daily, you say, okay, what's going on here? What is happening? Really, this wave structure is some of the nastiest and crappiest wave structure I've seen in quite a while. But looking at this wave here, it seems clear that we have some kind of a wave. Oh, come on. Some kind of a wave 4 followed by a wave 5. Okay. And here's your first wave correction. Okay. 3 down, 3 up. Now we got 3 down. Now this is where I think we go down here. Check it out. So this could be 5, but I think it's 3. 3, 3. Now we're looking for 3 more. You say boom, boom, boom. There, that could be it, right? Or this is boom. This is some kind of a flat boom, and we're gonna get a downward move like that, and that becomes boom, 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 retesting these lows. I know that's nasty. I know you don't want it, but that's a possibility. So what else could it be? What else could it be? Well, it might be that this was a 3-wave pullback. It's done. And now we're beginning to get some kind of a little 3-wave pullback, and we get bullish here and we start pumping. Okay. So we need some kind of a 3-wave pullback, and then we need to start moving up, breaking that structure and moving to the upside. And that's the bullish hope. Again, that's a bullish scenario. Where, hey, XRP is finished. This finished some kind of 3-wave move right there. Now this is the first wave. Now we're getting a correction. Needs to be 3 waves to the downside, and let's go. Let's get bullish. So yeah, that I'm going to be watching that as a trader to see if that's going to get up to our $8 to $11 range of XRP, which is reasonable in consideration. So, I don't know. That's the way I'm looking at XRP. Smaller time frame, it's just trash. I don't even know what to do with this wave. Really don't. How do you read that? Except maybe a WXY. It's really hard. I mean, this wave structure is so hard. 3, 3, 3. I don't know. I really liked this as 3, and I wanted to see it kind of come up. Right. That would have been nice. But yeah, counting this stuff, that's just nasty. It just resembles the failure. This wave right here just resembles the failure of that wave right there, just bigger. So we got some volume coming in right here. That's decent. That's actually quite it's decent for a bounce here, potentially. Let's look at Ethereum for a moment, just see what we can see there. Looking on the daily chart, I look at this thing and I'm like, man, this thing just does not look finished. This also is a very nasty wave, but it looks very much, how do I say, it looks very much, it looks like a WXY where you have 3, 3, and there's a sneaky 3 right there. It has a good extension for that. If we measure it like that, came to the 1618, past the 1618, but we're looking for 5 waves, best I can tell. We got 3 down, 3 up, looking for 5 down. I think we're gonna get a 5, 4, 5. That's ideal, an ideal world where this is an ABC. A, come on. A, B, 5 waves for C. 5 waves doesn't look done. I've got hidden bullish divergence happening right now on the daily chart. Hidden bull. Oh, excuse me, hidden bear. Sorry, hidden bear. Boom. Boom. We're going to get another move down. Is that 3 waves? Boom, boom, boom. Finished. And now we're coming down. Pull back. Come down. Maybe. Right there. 1, 2. 1, 2, 3, 4, 5. 4, 5. Hard to say. Ethereum's just, the chart is just absolutely whacked out as well. That chart just does not look good. It looks like it needs to come down here. It's broken the structure here. It's just not good, guys. Not good at all. I'm trying to look at it from a bullish perspective, and I'm just really struggling. But it does look like it needs a larger pullback. So let's take a peek at gold, silver, and the traditional markets. Just kind of take a peek at the overall markets here. Here's gold. Start of the weekly chart. So that's the way I'm counting it. This is some kind of 1, 2. One, two, 1, 2. I think gold has a lot more to go to the upside. But we are overbought for now. We do need a bit of a pullback for a couple months, if not 6 months. To a year even. Could have a pullback in gold. We'll see. Not a big one. Just a correction where prices are going parabolic, but we get a bit of a correction. Silver. Silver's just lagging behind gold. But I look at this chart and it looks very bullish. Boom, boom. We're starting to get moving here. It needs to start going parabolic. Well, rewind it Epsilon and check out the analysis. Let's check out Tesla here. Take a peek at Tesla. How's Tesla? Getting a little bit of a pullback here. Is Tesla done? I don't think so. Looks like we're getting to wave 4. Right here. We need a wave 5. One more wave to the downside, and then we're gonna be looking for some moon boy. 40 to 90 bucks, guys, is potentially a generational buy for Tesla if Tesla hangs in there as a company. Generational wealth right there. If price gets down to 40 to 90 bucks, that's going to be like buying Amazon. Cheap. And holding it. Yeah, let's look at S&P and NASDAQ. Yeah, so getting a bit of a pullback here on the S&P. It's a bit of a. I've been saying that S&P doesn't look finished. That we could see a blow off top here to $7,000 or even $8,000. It just depends. This wave structure sucks, but weekly. Let's go to the monthly here. You got lots of divergence here, so it could be done. I mean, there's so much divergence there. I mean, just look at it between this wave 4 and 5, 4, 5. You got double divergence here. It looks done. I don't like it, but this wave looks finished. We need 3 waves down. It could do that afterwards. But this correction needs to come, even if it comes way down. Got a big old monthly wick here. Crazy. Kind of a weird monthly candle. Let's look at NASDAQ for a moment. Where's my NDX chart? I can't find it. Yeah, there it is. My eyes are so bad. See, NDX looks more finished. 1, 2. But you could argue that this is wave 3. That wave 3 just finished. We're going to get 4 and then 5. That your wave 3 has 1, 2, 3, 4, 5. Now we're in something else. That we're actually just in a wave 4. That's possible. Or 1, 2, that's 3, that's 4, that's 5, and it's finished. Look at all the divergence. Boom, 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 boom. Break of structure. So, yeah, I mean, that has a done look to it. Current price action though on the weekly or daily could just be a 3-wave pullback, or it could be pumping up to make another high. Just it depends. So 3 up and then continuation down. All right, so there's the NASDAQ and S&P. Can't tell if it's finished or not. Certainly has that appearance, but this is pumping pretty decent, so it could go up and make another high. Could get a blow off top here. Agreed, Chemo. Something's on the horizon. Something is coming. Did you guys see the Economist cover? Let me see the 2025 Economist. I don't know what month it was. Let's see here. See if I can find it. Yeah, this one right here. Is that the one? Yeah, this one right here. So there's Saturn up here at the top is a symbol of power. You got this eyeball with radiation in the middle of it. You got let's see, we got hourglass. Time is running out. Another eyeball. You got, let's see what else. Come on. There was death to the dollar. Where did I see that? This hourglass is interesting. You got injections here. It's just kind of a crazy little thing. I don't know, man. It's you didn't enter the wrong channel, dude. This is The Economist. This is the cover of The Economist. Anyway. Yeah, I love all this imagery of the hourglass. Time running out. So, anyway, here's a dollar, DXY. I don't know if you were around when I called this pump to, I called about 110, 111. I was looking for 111. Didn't quite get to 111. I was looking for a little higher, but yeah, 110. Boom, we got a three-wave move, and now we're getting our boost. So A, this is B, looking for C. This is coming down. Or this is 1, that's 2, and this is just going to be in free fall here. We could get a bit of a reprieve. There's a possibility on the DXY. Come on. I'm having a hard time with my... Let me reload it, yeah. Ugh. There we go. Let's go to the monthly here. There we go. All right. So more than likely here we got a 5-wave move. 1, 2, 3, 4, 5 right there. Now this is beginning some kind of a larger pattern to the downside. The inflated dollar of the 70s. Crazy. We could get a bit of a reprieve here soon. Well, I say soon, in the next year or two. This could take a while. This wave structure is just nasty. 1, 2, 3, 4, 5. I don't like that 5-wave count though. It's ugly. It's not. Something's wrong with it. The dollar's a dying crap coin. Yeah. Double bottom on the 1 minute. Love it. I love it. I trade the 1 minute chart on Bitcoin, so yeah. I mean, I would zoom out just a little bit and look at the volume nodes here. See all these volume nodes? They kind of, so we did have some volume come in here. So yeah, there's a really good chance you get a substantial bounce at this location. There's a correction coming at least. Let's look at the 15-minute, what kind of the volume came in. Yeah, I mean, it's a substantial little volume node for sure on Bitcoin on the 15-minute. So yeah, I think you know, if you look of the similar sizes of volume, you got moves. So yeah, I think yeah, a move to the upside is certainly ready to happen soon. You got divergence here. We're oversold, and we have divergence on the 15-minute. So yeah, I'd be playing a bounce here if you want to be trading. What's up, Seth? Good to see you, dude. All right, guys. That's what I got for you tonight. I mean, it's only been an hour, but I think I hit all the highlights of everything I wanted to cover. I think just to kind of in conclusion, as far as Bitcoin is concerned and price action, there's just two things I'd be watching for. Watch for my crazy count, where this over the next 2 weeks pull back, you know, kind of works its way down, okay, and then back up. That's my crazy count, down to 68, up to 102. Roller coaster, baby. A, B, C. Otherwise, also, this could be finished, A, B, C, and now we're getting ready to go down for 3 more waves. A, B, C, A, B, C, and then A, B, C. Boom. This is a lot simpler than I give it credit for. Boom. 3 waves down to 68, then we're done. You got a higher high in the 1 minute. All right. All right. Guys, enjoyed being with you tonight. I'm going to call it a night. I'm kind of sleepy. I need to get some sleep. So with that said, I hope y'all have a fantastic week trading. Epsilon, what are you saying? UTA tells me all-time high for Bitcoin. 1 minute, send it. There it is. All right. Well, if you just got here, rewind and watch the analysis. I shared my nasty count as well as my simple counts, but I'm kind of bearish, guys. I am not because I want to be, but I think the chart is bearish. The wave structures I'm seeing are bearish. So hang in there and be safe. Y'all have a good one. Take it easy, guys.